What's up, guys? I'm Wyatt. Today I'm going to teach you about what an SMT is. Now let's get into it. So an SMT is a Kraken correlation between two correlating pairs. So for example, NQ and ES are correlating pairs. Also YM in there. You could have like any of the 4x pairs, like GJ, Euro USD. Those would be correlating with what's it called? The dollar, the DEX. Is that what it's called? The DEX? I forget what it's called, but that is the correlating pair for that. And now, so all an SMT is a liquidity grab that doesn't happen on both pairs. So for example, we'll say this is ES, and this will be NQ. Bang. That's a terrible Q. That's NQ right there. Okay. So now we'll draw NQ. Try to make these very similar for you guys so you understand. And we'll say like this is coming up here, make it the same, and say your buy side level, Just make it a little easier to understand, kind of understand, so you guys have an idea of what this will look like in a live market. Because that's what it's all about. You can know it from this, but can you recognize it in a live market? So now, what is different in this picture right here? So let's mark out our levels. We have a sell side level here. We have a sell side level here. You see how these are both the same exact lows? Both the same lows, but one takes it and one does not. So ES comes down, grabs this liquidity, and NQ does not. That is where you get your SMT. You can draw this line, it's a template. It's just a trend line, connect the two things, put SMT. Now, do you see how this SMT looks? Because this came down, took the liquidity, and this one did not. So now you can expect price to go to the higher. But the way I look at SMTs is they always match up depending on the time. So if you have a 5-minute SMT, if you have a 5-minute bearish or bullish SMT, so this would be a bullish SMT, right? If you have a 5-minute bullish SMT, you can expect it to go to the next 5-minute high for sure. You want to compare them within time frames, if that makes sense. So now, the next question is, another thing you can do is, so if ES sweeps the liquidity, right, and NQ does not, which one do you think will reach the top buy side level faster? The answer is NQ. It won't always be like that. They usually kind of start to catch up, but usually you can infer that NQ will reach the level first. Now, what do I mean by that? I mean by that, if you were, how do I want to do this? Let's say that you were racing your friend, right? And you have to start down here. This is the wall. This is the wall. You have to touch this wall first, and you have to touch these two walls, right? So you start right here. This is you. This is your friend. This is ES. This is NQ. So your friend starts up here, but you start down here. Actually, we can make it even better. We'll make it easier to understand. This is your friend. This is you. Now, one of you guys has to start at the wall, and the other has to start up here. Now, if you start at the same time, so like on a 3, 2, 1, go, who's gonna touch the wall first? It's a simple answer. Your friend. Why is your friend gonna touch the wall first? Because there is this big gap right here. See this room that he doesn't have to run from? You see how he can start all the way up here? And you have to start back here? Look how this matches up. ES has to come down and take that level, and NQ doesn't. So NQ is already higher. NQ is creating a higher high, higher low, when ES is creating a lower low. Do you see how NQ most of the time will get to that level faster? It is only a 95-point move for NQ, when for ES it is a 134. NQ should get to there faster. So that's a brief drawing example. Let's get rid of all this. Sorry, take a second. But they're very easy to identify because when you have the charts lined up next to each other, it'll really tell you. There's one evident, very good example. I'll show you this. All right. Let me set it up. Okay. So we have our two charts. We have ES and Q, right? We have this high right here. That's kind of bad. We'll do one that matches up a little better. Whoops. So we have this high right here. Right, we can all agree that there's a high here. Let's get rid of this. This is a buy side level, right? Now, you can see it says Tuesday 23, July 24 in the bottom of the screen. Now we go to ES, we go Tuesday 23, July 24, right here. We have a clear high here. So it gets taken way earlier, but it's okay. We'll still use it. Get rid of these two. So you can see ES is already taken liquidity. The first SMT was in this area. As you see right here, ES came up and took it. So you would draw the SMT like this. Bang. Bang. Do you see how this matches up in the picture? But this would be bearish. ES comes up, grabs the liquidity, and then sells off. NQ does not grab the liquidity and still sells off because you pair them together. Now I think we do have a bullish one. I'll show you guys. Let's get rid of all drawings. Okay. I think there's one down here. Hello, I'm back. So there is a bullish SMT down here that I will show you guys. And then that is all I have for you. So we're on the daily time frame. Now SMTs can happen on any time frame. But for example, we can say we have a low right here, Friday the 19th, April 24th, the year. It's your sell side level. That same level is going to be on ES, right here. Look, do you see the difference in these two? One took it, so you'd mark that out. SMT. And the other did not. So there's a bullish SMT. So you can expect price to go higher. So why do we think we have ES way higher than NQ? Because NQ took the level and ES did not. So as you see, there's another SMT there. So you can pair this with other trading confluences to help add more conviction to your setups and things like that. If you enjoyed this video, like and subscribe. Join the free Discord. Thank you guys so much. Have a great day.